Yeah, I want to take a moment today to just discuss closing cost and what a buyer can expect as far as dollars needed when you go to look at buying a home. The main definition of closing costs are fees that are associated with getting a loan. So that could be lender fees, title company fees, appraisal fees, or third-party fees. Oftentimes, there's a misunderstanding that closing costs just means everything. But there's a set of dollars called prepaid expenses that go into that total of what's needed the day of closing. And I wanted to show you today what the difference was. So let me share my screen here. And this is a total cost analysis. So this is for a client that I was just showing a few different rate lock options. So I'm showing them an option that says no points, 1 discount point, and no cost on that third column. You can see the interest rate is different. And that's because in lending, the more you pay in fees, the lower the interest rate. But for now, I'm going to just focus on closing costs, kind of go through that. All right, so here's a good screenshot of some fees that this buyer can expect to pay. So closing cost, the definition again are fees. So lender fees, third-party fees, title company, and recording fees. So I've numbered the closing costs, so 1 through 5. So at Zenith, we charge $14.97 as a fixed fee for everything that we do. So that covers processing, underwriting, doc preparation. This is a fee that oftentimes with other banks tends to be a percentage of the loan amount. So if you're borrowing $600,000, maybe the fee here is $6,000. If you're borrowing $300,000, the fee could be $3,000. I never really believed in that, never really made any sense to me, because the work on our end to hire a processor, an underwriter, and do everything we need to close your loan is the same. It doesn't matter how much you're borrowing. So we just came up with a fixed fee that covers that. Third-party fees, these are appraisal, credit report, flood certificate. These are all overestimated on our end. So these are kind of the highest fees I've seen in 20 years. So we show these to our clients and then we guarantee that number. And when it comes in less than that, they're going to pay less. 3, 4, and 5, these are essentially all title company fees. So the listing agent, the one who's selling the home, typically picks the title company. They tend to be all generally the same, but these 3 fees here are the highest, again, that I've seen in 20 years. So again, for our clients, I like to overestimate all these fees so that they have a nice overestimated amount due at closing, and then you get a good surprise the day of closing that they're less, as opposed to the opposite, which does happen in the industry. So 1, 2, 3, 4, and 5 here are the definition of closing cost or fees. The other dollars that a borrower are expected to bring the day of closing are called prepaid expenses. So this is the setting up of the escrow account for taxes and insurance. So typically your first year of homeowner's insurance is due at closing. And then the bank will put 3 months of insurance and 3 months of property taxes into that escrow account as a starting balance, so that next year when taxes and insurance are due, they're going to have enough money in there to pay those premiums. So in conclusion, the closing cost is often described to as maybe how much money you need to bring the day of closing. The true definition is really just the fees that are being charged, whether they're lender fees, appraisal fees, or title company fees. The amount that the borrower needs to bring the day of closing is a combination of closing costs added to the prepaid expenses to set up the escrow account, and then added to that the actual down payment. So whether it's 3% down payment or 20% down payment, all those will equal your cash to close or how much money you need to do this. If you have any questions, please reach out. We'll talk to you soon.